What do you do when the house of pleasure becomes the house?
The house of pain.
What do you do when the house of pain
The house of pain
changes to a much better address, moving right next door to the bull statue on Wall Street? That's exactly what happened today in this stock market. When investors abandoned tech, and when I say abandoned, I mean people fled from the group like rats from a sinking ship. It was Titanic. They took their money and went all in on the small and medium-sized companies we would call the Russell 2000 because we got a much softer than expected consumer price index, a number that shows inflation is effectively beaten, and interest rates are coming down. And that changes the whole backdrop. It's why the Dow ended up 32 points, S&P lost 0.88%, and the NASDAQ, home of the trillion-dollar techs, plummeted a staggering 1.95%, causing lots of people to say, it's over. More on that in a second. The real action, though, was in the bond market, where interest rates really plunged in recognition that the Fed may finally have whipped inflation, which means Fed Chief Jay Powell can start giving us rate cuts in the not-too-distant future. Listen, people don't buy the same stocks when rates are plunging than they do when rates are doing nothing or inching higher. Still, how does that cause big-cap stocks to get obliterated? How could Amazon stock tumble 2.4%? How could Apple stock lose 2%? How could Microsoft fall 2.5%? And holy heck, Batman, what explains NVIDIA's 5.5% dive? First, you have to understand that sometimes the stock market can switch directions on a dime. But typically that only happens because the much larger bond market does something extreme. With the new context of lower bond yields, all sorts of stocks that haven't been doing well this year, stocks of companies that need lower rates, can suddenly get bid up, be bought, because, well, that's what happens when rates go down.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.